everybody, and welcome to my channel. I am in conversation with Jimmy.Joseph. He is the VP of Mortgage Lending with Guaranteed Rate Affinity. Hello, Jimmy, and welcome to our show.
Hey, Fariha, how are you?
Nice to see you. Thank you for taking time out. I know it's family time, so we'll be quick. And I just want to start with tell me a little bit about yourself. I know about you, but tell our audience a little bit about you, how you got started and what motivates you.
That's a good question. What motivates me is just providing a value to something that someone didn't know they can have. And that something is a home. When you show the tangibles of what you can do if you work so hard and you can leverage some of that asset to gain more wealth, it kind of puts me in a mindset of here's an opportunity and here's how you get to this opportunity. Sure. So I just love explaining that, and it gives me joy because growing up, I didn't have these avenues as someone was talking about a mortgage. Coming from New York City, it was the mindset of you make enough just to get rent. It wasn't a mindset of, hey, you can have this and you can leverage this. It wasn't until I got into financing, working in the corporate America, I was able to elaborate on my growth and what an asset meant. So I'm having fun with it now. That's what drives me.
That's awesome. And it's so funny that you said that, letting people know about the opportunity that they did not think that they have. And that happens to be our topic of discussion today. You were telling me a little bit that you come from the finance background. Do you think that has helped you with what you do right now?
Absolutely, because it helps me. So I break the numbers down on a more of an ABC format, so one can understand. I don't overcompensate on the numbers behind what the interest is. I pretty much show them what the interest is, and then I show it in a way through a video content so they can understand. You take this number, you apply the interest rate that's given to you, plus minus the taxes and then homeowners insurance, and then maybe, depending on how much money you put down a loan product, you have mortgage insurance. I show it that way, and I add a little color to it so they can see the difference. I don't want to speak on a granular thing. I'm speaking to it specifically so they feel comfortable knowing that I'm their trusted counselor when it comes to mortgage needs.
Right. And if I'm talking to somebody who's consulting with me, I want to know details that apply to me rather than the general public, because who cares, right? I care about my monthly expenses more than anything anybody else's, right? I completely agree. So for people who don't know or don't understand, have never thought about purchasing a house and don't know where to start, we all know that getting pre-approved is step one.
Correct.
But there is a difference. Can you please tell us what is a pre-approval and how is it different from a pre-qualification, and why is it important?
That's a good question. So a pre-approval pretty much means that at least someone to my caliber, a professional, has taken your documentations and combed through those details to apply what we would call the mortgage application. Because what someone puts in something doesn't necessarily mean what that person has. So going through a pre-approval process, as you comb through that person's what they deem to be okay on the mortgage application, you're just making sure the two information are in sync with one another. And then we do what's called automated underwriting. We send through a system that tells us, based off the criteria that has been given to us, we take that information and understand if they're approved for X amount on their loan amount or loan product. As it relates to a pre-qual, it's pretty much what you and I are doing, having a conversation on a preliminary pretense that someone could kind of sort of afford the home, but not going deep into it because it's just a conversation. There has not been a true due diligence in the processing to understand if that person does qualify. So some institutions do provide pre-qual. We do not. I
Mm-hmm.
provide a pre-approval just because given uh, when someone's purchasing a home, a lot of emotions are involved and you want to protect that. And they're coming to you because they trust you.
True.
So you want to make sure when you're fulfilling that trust, you're also doing your due diligence to provide every avenue needed to make sure when they submit that offer, they're very comfortable with that purchase.
Mm-hmm. Yes, as a realtor, when people come and we have our initial consultation and we are talking about, what's your budget? Because that's one of the questions. And I always ask this question, what is your budget? And, we get an answer like, I think it is this much, or I think we can do that much. Without realizing that you are putting yourself in a box. You may be able to afford more, or you may be able to afford less than what you think that you can actually buy, you can purchase. So a pre-approval gives you a guarantee that you are comfortable with your numbers, and if you have and you are comfortable with the purchase that you are going to make into the future. So that's very important. My next question is that when you are pre-approving somebody, uh, if I have debt, okay, and that's stopping me from getting a pre-approval because I think I'm not either A, going to qualify, or B, I will have to pay very high interest rates because that's my assumption in my head because I have debt. First, tell us that what is considered as debt and what is not considered as debt, like when you're approving somebody.
So that is definitely a profile, a risk profile candidate that if they're applicable to something which is an asset which we're going to apply for, is something that we see what you've been doing with your life through credit reporting, how responsible you have been managing your debt. So having debt isn't a bad thing.
Mm-hmm.
Understanding where your percentages are with debt is what you just need to understand. So what covers debt is what we see on a credit report, such as any revolving debt, such as credit card, student loans, mortgages. We will also have a mortgage, like if you have another property, like timeshare, that's reflected on your credit because that's considered a property. Anything that has you paying a monthly obligation to something that has a tangible value behind it is considered debt on the credit report.
Right.
Untangible debts are light bill, gas, medical bills. Those stuff don't usually pop on the credit report because in some cases it's not needed. In some states, it's different. It varies in different states on what the monthly payment is. So some are not paying as much as they need to cover their utility bills. However, to be fair, utility bills, medical bills, and any debt that's not paid can reflect your credit report because someone can say, or the agency or the representation of that firm can go into your credit report and say, this client has not made their payments on their whatever bill that is, utility bill, and we want to get our money back so we can make sure that we can move forward with our lives. So that becomes they do what's called a credit inquiry, 1. 2, now they put what's called, what is it called? I'm getting twisted. I'm sorry.
Sure, no problem.
It's on your credit report and then you have to remove it. So it stays on your credit report until you satisfy that debt.
Okay. And most people are aware of something like that on their credit report. Like it's good practice to keep checking what your credit score is doing on a monthly basis.
Yeah,
would you say that's a fair assumption?
Yeah, there are vendors out there that can help you with that. You'll never get the true accurate credit score, but you'll get a preliminary understanding of what's going on. Also, once a year, you can go to annualcreditreporting.com. Once a year, you can pull down your credit information to see what some of the consistent things are reflecting your credit report.
Right. And also, would it be fair to say that if in order to get something, if you have had your credit checked, credit run, that would show up on your credit as debt. So if I bought furniture or if I bought a car and I ran my credit, that's going to show up on my credit report when I apply for a home loan.
That is correct.
Okay. Now, my next question would be, what are the considerations one should have when they have outstanding debt, like student loans, or like we just said, credit card payments and medical bills, etc. What are the considerations that do you think they should have?
Again, medical bills and any utility bills that goes on your credit report is because they have not been paid, and it's been sent to a vendor to collect payment that you did not make your monthly obligation to. But it's not something that's reported on a monthly basis. It's just something that you let that debt get to a certain amount, you did not pay for it, and now they want to collect their money. So medical bills and certain bills will go on your credit report so you can establish payment to pay them. Some vendors will go that direction. As it relates to student loans, given the situation we are right now, some of us are still dealing with forbearance. Forbearance means that you're not paying your student loan. However, in the mortgage industry, we consider that debt that's to be paid on a monthly basis, because at some point forbearance expires. So we have to use what's called a formula to help assume that once you establish your payment again, that number is factored into your mortgage, because a mortgage, in most cases, some are signing up for 360 months, 30 years. A forbearance won't last that long. So we use what's called a simple formula to help fulfill that number, assuming that is going to be paid in addition with your mortgage, which will then reflect what's called your debt to income ratio. Your credit card, it's important to have a credit card, but it's also important to use it to a certain usage, so you do not run up a certain amount where it would reflect your credit scores. A good example, if a credit card, let's say Visa is giving you a $1,000 limit. If you're at $995, that's considered risk, because they gave you $1,000 and you're $5 away from the credit limit. We ask most is try to stay within the 30% utilization, meaning if you can stay at 300, that shows that given the fact that you were given a certain amount in debt, you're not maximizing your debt. So therefore, we know you can manage your day-to-day monthly expenses.
Right. And also at the same time, it is important to create these I'm at a loss of words, but
it's okay. I was at loss at words with one of mine. I was like, oh man, I got twisted. It happens. We're human. That's the good thing about having you and I on this Zoom call, because we do, you get twisted. You feel you have it in your head. You're like, oh man, I missed that one.
What I was saying is that it's not a bad thing to have credit. In fact, it's to your benefit to have credit, because you want to show people that you are able to have a credit and then maintain it. You are going to make your payments. So it's not actually a bad thing to have some amount of credit card bills or something like that, as long as you're paying everything on time. Would you say that that's correct?
That's absolutely correct. I mean, in order for an institution to feel comfortable knowing that you're going to make payments, they would like to see a history. Usually when applying for a mortgage, we want to see at least 2 years of history. So right. it gives us comfort that if we give you something of a large asset, that you'll make your monthly payments.
Right. So between somebody who has zero credit history and somebody who has like 5 years of credit history but has some debt but has been paying on time, making their payments on time, they are a better candidate who has a credit history.
That's correct.
Right. Do you recommend waiting to buy from an interest rate perspective right now, even for people who have debt, and why?
Interest rate or interest rates. I always
Mm-hmm.
feel like if you want something, you're buying something because you want it. I always
Mm-hmm.
feel when it comes to purchasing, it's always feelings involved. It's always personal. People move because they want to leave the school or they want to come into the school. That's a personal choice. Interest rates just
Right.
so happen to be at the time where whatever it is. Obviously, most want the best deal when it comes to an interest rate, but everybody moves in different spaces. So you can't take one number and say this is better than that year, that was better than this year. You're buying something, it's for the family or not family, it's for an investment or not investment. It's
Mm-hmm.
whatever you want it to be. However, at the time, you have to understand that someone like myself is going to give you the proper interest rate as it relates to your monthly payment. So right
Right.
now, to answer your question, it is a good time to buy. Rates are still low. There's nothing that indicates it's going to get lower.
Mm-hmm.
But again, given the fact that, look at it this way, more people are making more money now.
Yeah.
I mean, that's a fact. I mean, I'm and younger people are coming into the market buying a home. Years ago, buying a home, you were looking at 34, 35, 36.
Mm-hmm.
You got 25, 24, 20, younger generation is coming in there. And also keep in mind, we have more people coming into the country and
Right.
more are finding solace in home ownership.
Mm-hmm.
So that within itself would give you more reason to go look for a home because it doesn't look like it's stopping.
Hmm. Also, the youth has gotten smart. They figured it out that instead of paying rent and paying somebody else's mortgage, they'd rather pay their own.
Right.
Um, First thing, and second thing is that the rents are always going to go up. They've been the highest that they have ever been, and interest rates have been lower than they have ever been. So it just makes sense to buy regardless of what your situation is, because you are, even if you don't pay a mortgage, you're still going to pay rent.
Right. It's like anything else. And
Right.
look at it this way, when you make a certain amount, you can't write off your rent expenses.
Mm-hmm.
You can write off your home expenses because now it goes against your taxes, your gross income. You have something to write off partially the monies you make year per month. So
Mm-hmm.
you have something to offset that. So the tangibles are there. In addition, when you have appreciation to what we've seen the past 2, 3 years, you also have what's called capital. You can take those same liquidity resources. Again, you're not using your home as a bank, but you're leveraging different things that you can do as
Mm-hmm.
far as getting a vacation home,
Mm-hmm.
settling maybe outstanding credit card debt, or expanding your living conditions, or
Mm-hmm.
even settling debt as it relates to your child, covering their student loans. These things help because now you settle their debt, so they're not graduating from college with a mountain of debt. So there's
That's
so
true.
many different avenues you can take from home ownership. It's what you do with it. Again, I would never, never encourage someone to use a home as an ATM machine because that's not its purpose.
Right.
Only purpose is to make your family feel comfortable, given the fact where appreciation is, to leverage it with some of the things you can do to help further your wealth.
Mm-hmm. That's true. And also, the idea that a home is meant to be a single family home, I think that needs to change a little bit, because homes come in all shapes and forms. It could be condos, it could be apartments, it could be studios. But as long as you have something to call your own, it's home. Any last piece of advice for people who are watching right now and people who will be watching later on?
It's a good time to buy. And if you're looking to expand and get more of a knowledge of what home ownership look like, speak to Fariha, right? Speak to you.
Fariha.
Fariha.
You'll get my name.
I keep saying
Fariha.
Fariha.
Yes.
I keep saying, I have it in my head, right? And then
I know.
you have, so it's more or less speaking to someone like you to expand on some of the tangibles that come with the home, so they feel comfortable when they make those monthly payments.
That's true.
These things help them feel, it establishes the trust again that, I work hard. This is what I have. For me to help me find this house, there's always a story behind a home purchase. And
that's true.
When you and I are able to do that, that's what makes us enjoy. So on that note, just, you're gonna find the home you're looking for. Contact Preapproval for more of what your journey looks like.
Yes, absolutely. Definitely give me a call and we will set up a consultation with Jimmy.Joseph and he can run the numbers with you. And you need a team behind you who's looking out for you. That's so important in this purchase, in a home purchase. And we are a team that will look out for you. So with that, if you have any questions, please feel free to reach out to us and we would be more than happy to answer your questions. We are tagged in all the posts and our contact information will also be in the description, so you can always reach out to us. Thank you so much, Jimmy, for your time. I know you have to go back home to your kids. I'll let you go, and thank you so much for coming. We really enjoyed it. It was a very informative conversation. Thank you so much.
Thank you, Fariha.